The truth about tax-free growth in life insurance. I see tons of videos, tons of marketers out there around life insurance that say the following. You get tax-free growth, tax-free retirement, tax-free this, tax-free that. That is a half-truth. And I'm going to break it down. I have other videos talking about this, but I've been seeing it a lot lately. So what does tax-free growth actually mean inside of a life insurance policy? Well, number one is it's not actually tax-free growth. It's technically tax-deferred growth. And it's also important to be aware that the life insurance policy has to be set up in a very specific manner to allow it to grow tax-deferred and for you to access it tax-free, which is going to get into my next point. Because the last thing you want inside of a life insurance contract, if you're trying to get tax-free income from it, is the last thing you want is for it to turn into what's called a MEC, or a modified endowment contract. If that happens, if your policy turns into a MEC, you can no longer get tax-free income from the policy. It's going to be taxed like a 401k or an IRA. You're going to have to pay taxes on the money, but get this, you're going to have to pay taxes on it even if you take a loan against it. So that's very important to be aware of. And on top of that, when it's a MEC, you have the 59.5 rule. So if you're under 59 years old and you want to tap into your money or your cash value before 59.5, you're going to get whacked with a 10% penalty, and then you got to pay taxes on top of that. So that's side note there, but that's really important to be aware of. But essentially, your policy needs to be set up to where it's non-MEC, it will not MEC, which is really important. And then again, the way you actually access the money tax-free, assuming it's set up properly, is two ways. Number one, you borrow against the cash value and you get a loan from the life insurance carrier. Well, obviously that's not going to be taxed because it's a loan from the carrier. It's debt, so there's no tax on it. The second way is you can withdraw up to your cost basis tax-free because it's the money you put in. Those are the two ways that the life insurance policy is tax-free. So it's just a half-truth. It's not 100% accurate when, like if I were to say you're going to get tax-free growth on the policy, you don't really get tax-free growth. It's technically tax-deferred. You can access the money tax-free via a policy loan or withdrawing your basis. That's how it works. You're going to see a lot of people marketing it as tax-free growth, which I'm stumbling on my words here because like technically it's not, but if you access it through the two methods I mentioned, the policy set up properly, I guess technically it is, because you're not going to be paying taxes because it's set up properly, it's not going to MEC, and you're withdrawing your basis and or taking loans, so you're technically not paying tax. So that's just the reality of it. And I wanted to make this video again because I've been seeing a lot of just people marketing it that way, which, you know, I have my opinion. I think it's a bit aggressive because it's not 100% accurate, but that's essentially how it works. And I'm just looking at my notes here to see if I'm missing anything. Oh, there is something I do want to mention is no matter, and doesn't have anything to do with the tax-free growth nature of the policy, but even if your policy is a MEC or non-MEC, the death benefit component of the policy, that's always going to be paid out income tax-free. So that's very powerful to be aware of, is that is the component of the policy that is tax-free 100% of the time. MEC or non-MEC, that death benefit, when you kick the can, it's going to be paid your beneficiary or your beneficiary's income tax-free. Quick video here, but I hope that this sheds some light. So if you hear some videos out there, people saying tax-free growth with inside of a life insurance policy, just take it with a grain of salt and just know most people saying that, they don't mean any harm by doing it. Okay, it's just they either don't know what they don't know or they're marketing it a bit too aggressive. But just know most people that are saying that are coming from a good spot. I'm kind of on the fence with how I feel about it. I personally think it's a bit aggressive, but again, just know that most people are coming from a good spot when they're saying that. And lastly, what I want to leave you guys with is ask a lot of questions before you decide to get a life insurance policy, because there are a lot of half-truths. There's a lot of technical parts to these policies that as a policy owner or a future policy owner, you should be aware of. So just don't be afraid to ask questions. Don't be afraid to ask a lot of questions. Like, that's exactly what I did when I, well, not in the beginning, but later on, I shifted to just asking every question I could possibly think of. And the more educated you get on this too, you're gonna know which questions to ask, because there's that component too. It's like you don't know what you don't know. It's like, what questions should I even be asking? But as you get more educated around this, you'll know what you need to ask different agents out there. But again, hope the video helped. Please leave any comments below or any questions below in the comments if you do have any. Subscribe to the channel if you're new, and I will catch you in the next video. God bless.